taking a look here, we've got different types of engagements and looking at the types of assurance provided in each of them, as well as the standards that they're going to need to follow. Examinations, similar to audits in the sense that we have opinions and we provide reasonable assurance. Now, what is this concept of negative assurance? Focusing in on our compliance reporting, because that's the section we're in, and they provide negative assurance. What is that? Well, it is a statement by the auditor that nothing has come to their attention to suggest that the financial statements are not presented in accordance with frameworks such as GAAP. That differs from reasonable assurance. Reasonable assurance is the level of assurance which an auditor provides in their opinion of the financial statements, and that requires the auditor to perform audit procedures to obtain sufficient and appropriate audit evidence. You can think of this as a higher level of assurance than negative assurance. Reasonable assurance requires you to actively go in and make sure that the financial statements are accurate. Negative assurance requires you to go in and see if there's anything strange, anything that makes the financial statements not meet a certain level of criteria. That is a big difference there, and make sure you're familiar with that. Understand what type of assurance each engagement provides, as well as the differences. And make sure you know that agreed upon procedures provides no assurance that provides some sort of findings or conclusion. So that we'll see that in our lesson there on agreed upon procedures. Looking good here, moving along at a good pace. Taking a look at this wonderful graphic here, we see different types of services, different types of engagements. We see the standards they need to follow, and we're going to focus in on our wonderful compliance reporting requirements here. We see that we actually have 3 options for engagement types when we are trying to do a compliance engagement. We have audits, and if we do a compliance audit, that's going to need to require statements on auditing standards. And we can also do an examination or an AUP for a compliance engagement. And if we do this, these are going to need to follow SSAE requirements. Again, taking note here that a compliance report can be an examination, AUP, or an audit. That is important there. Now, awesome. Let's take a look. Which are these are going to be restricted use? These are going to be really just the audits here for the purposes of our compliance engagements. For examinations, we're going to provide reasonable assurance. For agreed upon procedures, we are not going to do anything insurance related. And then for audits, we are going to provide only negative assurance. Now we see here, even though it's an audit, and audits usually provide reasonable assurance, because this is a compliance engagement and it's not a normal audit, we are going to provide negative assurance. Hence the slide we saw before. Just reiterating that there. This is a compliance audit, which is different than a normal audit. This is an audit to make sure that an entity is in compliance with certain requirements. And another note on the negative assurance piece. Why are we not providing reasonable assurance? Well, first off, reasonable assurance is more work, and with more work, we know requires more hours and more budget. We may not have that. But in a compliance audit, we'll use the constant situation of the bank wanting a compliance audit on whoever they lend money to, because there's a lot of money involved there. And when the bank requests this compliance audit, they want to make sure of a few things. They don't care if the financial statements are materially misstated or not. They just want to know that the current ratios are looking good, because that's part of the debt covenant. They just want to know certain things. They want to make sure that the company has, let's say a certain amount of money in their bond sinking fund accounts, which are those bank accounts that are going to hold specific amounts of funds to pay back debt. They want to make sure that this company is not actually paying dividends. Maybe they shouldn't be, or they're restricting their dividends. So that's the difference. It's negative assurance because the auditor here is just making sure that certain requirements are being obeyed and followed. We don't need full unreasonable assurance on that. We just want to have negative assurance. And a caveat here is the entity must have audited financial statements to begin with. So here, the entity is borrowing money from the bank. They have to have financial statements that were audited to begin with. And then on top of that, the bank is going to require them to get, possibly in this case, obviously we're assuming this is the case, the bank is going to require them to get a compliance audit, which is going to provide negative assurance on top of that audited financial statement piece, which provides reasonable assurance. Lots of complexities here. I'm having a good time. I hope you are as well. It should make sense now. This is just a particular circumstance, particular situation. As we like to say here, this is kind of like a big menu. We've got all of these different types of engagements, anything from prospective financial statements to pro forma, compliance, service organizations. We want to see what can happen here, and clients can choose anything they want from these menus depending on the requirements. What are some considerations when we're dealing with compliance engagements, and reminding ourselves that compliance engagements can be examinations or AUPs, or full-on compliance audits. Now, this is pulled from the ASCPA's authoritative literature. This provides guidance for engagements related either to an entity's compliance with requirements from laws, from the government, regulations, from, for example, the SEC, ASCPA, PCAOB, any rules, general rules, contracts or grants coming from the federal government, contracts coming from contracts with the bank, contracts with suppliers, with purchasers, anything like that, or the effectiveness of an entity's internal control over compliance with specified requirements. And these compliance requirements may be either financial or non-financial in nature, meaning, hey, is this company actually obeying their benefits plans for their employees? Maybe I'm just going to give a bunch of situations because this is pretty broad. I mean, any sort of law or regulation can get a compliance audit or compliance engagement. Maybe the federal government wants you to get a compliance audit to make sure you're actually paying out your employee benefits in compliance with federal regulations. That could be something we'll see. An important consideration in determining the type of engagement to be performed is expectations by users of the practitioner's report. Obviously, as we mentioned, we can have an examination compliance engagement, we can have an AUP, we can have an audit, and what's the difference? In general, what's the difference between any of these engagement types we'll see throughout the entire exam? What are the expectations? What are the needs of the users of this report? What are the needs of the users of the financial statements? Since the users decide the procedures to be performed in an agreed upon procedures engagement, it will often be in the best interest of the practitioner and the users, including the client, to have an agreed upon procedures engagement rather than an examination. And really, what we're talking about here, agreed upon procedures are the most flexible. Whoever the end users are, the ones hiring the auditor, making sure you get this audit, they may have specified specific requirements that don't fall in line because examinations have quite rigid guidelines on how the engagement needs to be conducted per the ASCPA, per all of these regulations. Now, AUPs are quite flexible as compared to that. And with our AUPs, they can list out a whole conglomeration of procedures that the auditor or the practitioner doing the AUP should be doing. So that's why we see here it's kind of preferred to do that. No, it's not required. We have different situations with that, different criteria. When deciding whether to accept an examination engagement, the practitioner should consider attestation risk, which will be covered later. Make note that we should consider that. We'll cover that later.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.